Hello, trading is closed on April 29th, 2020. We'll go over our calls. Look for the pattern with the early high. This is it. Tends to have a high in the final hour. Tomorrow also has the early high. The early high. So the commonest thing is to gap and promptly move outside the day's range. Certainly did that. Had a target of 29.0522 optional. We gapped right over that, so that's been satisfied. I put this on the page with the blue background because yesterday's pattern was so negative. I knew the only thing that would kill it would be to gap over yesterday's high. Can't say it was impossible. I didn't think it was likely, and since I don't trade overnight, even if this printed, it would have to be at the open, so I didn't put it on this page. Probably should have. The same pattern that generated this target generates this one for tomorrow. 29.1708. 95% chance we see that. Hardly seems possible after an all-day rally like that, but you never know. We had an FOMC meeting. Typically there's a three-leg whipsaw. Here's one up, two down, three up. That's been completed, each leg further away from the point of the announcement. Typically the first move telegraphs the next major move in the market, and the first move was up. We also have a wall into the close, often that gaps up. So if the rally is going to continue, all we need is to gap and promptly overtake this high. And if the rally plans to continue, it shouldn't be that hard to do. On the other hand, if we rally all day and we close under all these highs, and we can't break through them early, that's a negative pattern. During the day, MEJT said this drop was false. We'd overtake these upper lines, and we did. Now here's the weekly chart, and as we've said, the 89-week moving average is not perfect, but it tends to differentiate bull moves from its counterpart on the bear side. And now we're over it. And ideally, if the bear was going to resume here, and I still view this as a bear market move because the bottoms, there ain't no such animal. Ideally, we would have stayed over this. Under it. Well, the idea is that this was we're making B, that this is a valid break. And before we go through the line, we should drop under the line by the same distance we went over it. And that's significantly south of here. But until we break down, we don't know where it starts from. And to really complete this corrective wave, you want to undercut this low. That's back in the low 2700s. 200 points away from where we are. It's hard to get good Fibonacci relationships with this count, but as always, it isn't the only valid count. If the wave blue A is the same, and blue B is in ABC, with C having 5 waves, you've got some pretty good fibs here. Doesn't mean it's the only count that works. Typically, these won't go all the way to the apex. So, if this is the right count, it certainly would make sense for us to drop right from the open. But at this point, we don't know if it's the right count or not. At least if we drop, we can explain it. Well, tomorrow's pattern has the early high. Doesn't mean you won't gap down. All we need to do to continue the rally is to gap and promptly overtake to today's high. And futures are up as I'm recording. But if we don't do that, it's a negative pattern, and there's a 95% chance that before tomorrow closes, we'll see 2917.08. So be on the lookout for tomorrow's open. Gapping up makes this pretty unlikely, but if we can't, that's the target. And furthermore, it could be the start of the big drop I've been waiting for. That's today's call.